Two American nomads, same $200,000 income, same high-tax country, same $0 U.S. tax bill this year. But one of them just banked a $22,000 tax credit and the other burned it. Same income, one box. The geographic dividend. Where you live is a financial decision. By the end of this, you'll know three things: what the foreign earned income exclusion and the foreign tax credit each actually do, which one wins for your country, and the credit-killing mistake most people make on autopilot. Move abroad and your U.S. tax doesn't switch off. America taxes its citizens on worldwide income, so two countries can have a claim on the very same dollar. The whole game is making sure you don't pay both. You get two tools to stop the double tax, and most people grab the famous one. The exclusion erases your U.S. tax on foreign income, up to $130,000 for tax year 2025, and $132,900 for 2026. The credit does something different. A dollar-for-dollar credit for the foreign tax you already paid, and anything left over carries forward for up to 10 years. Which one wins comes down to one question: how much tax does your country charge? In a low or no-tax country, the exclusion wins. There's little foreign tax to credit, but pay tax at or above the U.S. rate and the credit wins. It wipes your U.S. bill to zero and banks the rest. Watch it happen using 2025 figures. Maya earns $200,000 in a high-tax country and pays $60,000 in foreign tax. Both routes wipe her U.S. income tax to zero. But the exclusion wastes the foreign tax on the excluded income and banks nothing. The credit uses all $60,000, zeros her U.S. bill, and carries $22,900 forward, money toward a future U.S. tax bill. Same zero today, $22,900 apart tomorrow. But before you pick, one trap catches freelancers and the self-employed every single year. The exclusion erases income tax, not self-employment tax. Run your own business abroad, and that 15.3% is still due, about $27,000 on a $200,000 income for tax year 2025. Neither box touches it. Plan for it, or it becomes a nasty April surprise. So, the exclusion erases U.S. tax up to the cap, but wastes foreign tax in a high-tax country. The credit refunds what you paid and banks the rest, and self-employment tax never disappears. Pick on purpose, not by default. Want to see which election wins for your country and your income? Run your own numbers. The free country-by-country guide is linked below. One important note: this is education, not tax advice. Your return has details this video can't see, and these are illustrative 2025 figures, so run it past a cross-border CPA or EA before you file. The math doesn't care where you're from, it cares where you are. That's the geographic dividend.